Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that dump on the charts. Guys, if you can't see altcoins, you can see most of them are sinking except for BLZ, a couple others over here. Perp taking a pretty hard hit. Guys, let's jump straight to the charts for this crypto quickie. But before we do so, let's just do a quick review of the last episode and what I said in it. We have a very narrow, momentum pool today, this green band, and should we lose 25,836, then we could easily see ourselves just wicking, sort of like these wicks over here, down to the bearish control zone, somewhere around 25,500, and then of course we win. Okay, so if we lost 25,836, we could see ourselves just crossing down into that $25,500 area. Let's go ahead and do an update here, and you can see that currently we're at 25,700. We did wick a little bit lower, close to that $25,600, and we're just kind of hanging on for dear life there. Now, I do just want to give a quick update on the daily. As you can see, we are just hovering over here, a bit of a bearish orientation overall. We do have liquidity around 23,000 and also additional liquidity around 18,000. And those are prime targets for market makers if they do want to bring the market down. Guys, here are your key levels for the daily. You can see that we continue to be operating in this kind of thin momentum pool, and the daily one has already been filled since the start of the day, and we will breach it underneath 25,680. So guys, that's the level that we do have to hold on to just to not add to our momentum to the downside. If we do cross that, we'll also be crossing into the bearish control zone underneath 25,700, and that could be the catalyst that ends up bringing us down to that next move, perhaps to the $24,000 range or even 23,000. So we do have to be highly aware of that. Of course, we do have this wick support around 25,300 to 25,000 ish, and so we can just play it by ear. But if this market does decide to tip over, then this would be your first heads up, and then of course your second warning would be losing the general continuation around 25,570 on the daily there. Now, if we do want to have a bit of a recovery, yeah, we could wick down here and then bounce back up into the pool, recover it above 25,832, and then quickly recover the volatility pivot at 26,000. If we did that, that would basically hold our sideways momentum, and it would additionally give us a bias to the upside because we'd be on the upper side of the volatility pivot. From there, we could try to take out the Bollinger Band mid line on the daily, and then the neutral point of control around 26,596. Should we breach above 26,697, we will be taking out this diagonal that's kind of been, our resistance that we've been bumping our head on and also tipping over underneath. And should we be able to grab that big alpha energy there, then the intensity of our move could take us all the way up to that $28,000 zone, where we might get another solid rejection. However, if we are accepted, then it could even be that the bull run is back on. But for now, we really are dealing with these lower tier levels, and of course those are your key levels for the day. Guys, I do want to just walk us through the 2 week. Of course, I've gone over the 2 week several times since the bull run, starting at the end of last year. But just at the top of the market, you can see this 2 week chart that I had back here in June, the start of June. I gave this 2 week, and you can see what happened. We basically tagged the bottom of the 2 week pool, and then we launched off of it, tagged the volatility pivot, and have now come back to recheck the pool, where we are just re-swimming in that pool. Now, guys, again, this was support before. Could it be support again? Maybe, but if we do lose this area, then of course this pool will officially be negated. We did have an update at the top of the market here after we had that massive pump. It was time to give an update on that one. And you can see that we did have a deep pool. And this one is actually quite interesting because it did call the top of the market right here at the bullish control zone, which we weren't able to get above. And being rejected by that bullish control zone, we did lose our hold momentum, that drive to the upside. And then we lost the volatility pivot around 29,400. And that would have been your warning that a big drop could have been coming, because our bias would have been squarely to the downside as we re-entered the pool. So that was a shorting opportunity, and that was basically validation of it. And sure enough, this next candle just dropped all the way down. But where did it hit? Precisely at the bottom of our momentum pool, where we did try to get a bounce. And that's going to be a very interesting feature. But we did try to get a bounce, but we did get a heavy rejection. And so that's why we currently have this downward orientation. Now, if I do show the next update that we gave, you can see, wow, that pool is actually higher than the other one. Well, really, it's just taking into account these drop candles. We would have been off of this indecision candle over here. And if I turn everything off, you can see that by the time we did drop down, look where we wicked up to. It's this wick right here. If you can see it on your screen, it goes all the way up to 28,200. And again, we would have been on this candle, nowhere near this. We would have been a month ahead of this candle right here. But where did we wick back to? Precisely to my volatility pivot at that 28,215 level, where we did get a heavy rejection. Again, just reinforcing this bearish momentum on the biweekly charts there. Now, finally, let me give you our current update on the biweekly, because I have proven to you just how well these key levels do work. You're going to do really well if you keep them in mind. And currently, we are unfortunately still underneath the pool there. So this pool could shift us to the upside should we get back inside of it and just hold our momentum kind of sideways here at 25,832. We could attempt to take out the neutral point of control on the biweekly if within 2 weeks we can get above 26,802, and that would suggest that maybe we could tag the top of the pool at 27,278. If we are able to get above 27,440, then we have a chance at taking out that intensity area at 28,250. And again, that could just reignite the bull run, where we will face a slightly lower threshold of the 2-week volatility pivot here around 30,483. Now, that could be a check back that ends up just dropping us further, or we could even continue to squeeze up here. If just the market's super bearish, we could continue to squeeze all the way up to 35,000, and then perhaps launch off of that pivot later on. But currently, unfortunately, we are in a bearish orientation, and we have to accept that at face value. So until we get above 25,832 on the biweekly, it does suggest just continuation to the downside underneath the pool, underneath the pivot. That's usually a shorting opportunity. Now, of course, this candle could just be be the finishing move off of this trend right here. So we do have to give it a chance, and 2 weeks isn't a short amount of time. So there's plenty of price action in between there. But because this does tend to control our macro movements here on the 2-week, it is important just to be aware of these key levels. And you can see that the bearish control zone does start at 19,485 currently. So let's just say that we have lost the neutral point of control already, and that we do lose our momentum pool on the 2-week, and that we do continue to the downside. Then what I could see is us potentially getting a bounce in that 20K area should we grab this liquidity around 23,000. And then maybe a flash wick down to this liquidity pool down here, and then maybe we quickly recover the bearish control zone and work our way back up to the pivot. So that's the bearish perspective. I already talked about the potential bullish perspective. If we do throw on our EMAs on the 2-week, you can see that we do have a little bit of support coming in around here, around 23,500. We do have a lot of limitations over our head now. Almost every EMA is over our head. And so the only real support that we have down here is this I believe it's the 35 simple moving average there. And so guys, that's just not much, to be honest. Okay, so if we do get down here, get a little wick, kind of chop to the side, we'll really be praying that this area holds and that we don't just go for the full retrace down to the bearish control zone before coming back up to the neutral point of control. Of course, because the neutral point of control is in our current momentum pool, again, if we do cross the pool, then we're going to start having a bias to the upside as bulls start to regain control of the chart, and then they'll have a firm bias above 30,483 should we be able to reach there and hold there on a closing candle basis. Guys, that's going to be your alpha for the day. Stay safe and happy trading.